Okay, I'll make a gentle start, Toreson, while we're waiting for people to get themselves signed in. Well, firstly, a huge good morning and welcome to all of our guests. Thank you very much for tuning in to join us for today's seminar. I know it's set to be another incredibly busy and difficult week for us in the travel sector following the weekend's news about lockdown and the ban on international travel. So it's certainly a challenging time for you all and your teams and your businesses. So really appreciate you taking some time to join our seminar this morning and take part in our conversation about payment systems, which is a topic I think that's really come to the fore in recent months, not only because travel and hospitality businesses are under incredible pressure to control costs at the moment and to optimize all of their sales channels, but also because of the volatility of the travel sector and how that's affecting the way in which the travel sector is viewed by certain payment partners and the impact that's having on some travel companies at the moment as well. So very much a hot topic, and hopefully we'll be able to give some real insight and some practical tips as well, perhaps, and some things to think about this morning. So we're going to be addressing the key issues, challenges, and opportunities surrounding payments in travel, thinking about the number of acquirers that you work with and why expanding that can be a real benefit. Thinking about frictionless checkout and the results that that can drive, also touching upon fraud risk as well, and some of the forthcoming changes that you need to be ready for in the online payment sphere. Very pleased to be joined this morning by the co-founder of APEXX Global, Toreson Lloyd. APEXX Global, if you're not familiar with them, is an award-winning global payments platform. So Toreson is very much the man to advise us on all of the areas I just outlined. Audience, if you're listening live, please do post comments and questions. You can use the chat functionality or you can use the question functionality. I'll keep an eye on that. We'd love to hear from you. I hear your thoughts and feedback and also any questions that you think Toreson might be able to help with. You'll also see some polls popping up in the polls tab too, which you should see whether you're watching live or on demand. So please do take part in those polls when they pop up. Back out in the virtual lobby, you'll find an APEXX Global booth. So somebody from APEXX Global, I think that'll be Sam on the marketing team, will be there if you would like to connect with APEXX Global later and find out a bit more about what they do. And just on the technology side, if you have any problems with your video, your sound isn't so great, then the best way to fix that is just to refresh in your Chrome search bar. Just hit refresh and you'll be back within a couple of seconds. And that does tend to fix almost all problems if you're not able to sort of hear us very well or the picture gets a bit sticky or anything. Great. Okay, Toreson, over to you actually. Could you give us a really quick introduction to APEXX Global in a nutshell, what you do and the kind of clients that you work with, just to set the scene for this morning?
Sure, yeah. Thanks, Pip, and good morning, everybody. So APEXX is what is commonly being referred to as a payment orchestration platform or a payment orchestration layer. So we're an acquirer-agnostic, fully independent payment gateway that provide our merchants with access to any acquirer or payment method globally that a travel business or a retailer or a money service business may wish to utilize in any of the given markets that they operate. The idea being that improving your acquirer ecosystem will help to optimize both your cost base, so reducing costs, which in a business, an industry as margin sensitive as the travel industry is obviously key, but also making sure that acceptance levels are optimized in each of the areas that are geographies that a travel business operates. So making sure as many of those transactions are accepted as possible. The flexibility of a payment orchestration layer goes far beyond that. For instance, having that technical integration into multiple acquirers or providers can give you, again, lots of flexibility should your relationship start to sour with an existing provider, if they start asking for additional collateral, which is something I know we're seeing in the industry significantly at the moment, or deferred settlement times. Having that degree of flexibility puts an element of control back into a travel business's hand rather than the entire control sitting with the acquiring bank or the incumbent provider. We work with all kinds of travel businesses across the sector, OTAs, travel management companies, airlines, hotels, but we also work outside the travel sector with retailers, large global retailers. Globally, we also work with a number of money service businesses. So we get to see things not only from a travel perspective, we also have that breadth and depth of knowledge that come from working cross vertical. And quite often there's things that we see operating in different sectors that can benefit the travel sector.
Okay. And I know we've got guests today from very different parts of the travel industry. I think some cruise lines, hotel companies, airlines, tour operators, retailers, and based in different parts of the world as well. And just to avoid any confusion whatsoever, what do we mean when we're talking about contracted acquirers, and what would be the main examples of those contracted acquirers, just so everybody is totally on the same page in what we're talking about?
Yeah, no, absolutely, Pip. So the acquiring bank is the institution that provides the MID, the merchant identification number. They're a financial institution that links merchants to the relevant card networks, and then ultimately out to the card issuing banks that provide the authorization or indeed the decline for each of the transaction. Examples, probably the most well-known examples of acquiring banks in the travel industry are the likes of WorldPay, Elavon, Vantiv, First Data, Barclaycard, Global Payments. So hopefully those names should resonate with people.
Okay. And what's been the traditional way that travel companies have worked with acquirers? I mean, sort of the legacy situation that a lot of travel companies might find themselves in terms of how many partners they have. Would some just be working with one partner, perhaps?
Yeah, it's an interesting one because the word legacy plays into this quite intrinsically. A lot of certainly global airlines, for instance, are very reliant on global distribution systems. So the likes of Amadeus, Sabre, Navitaire, and the like. And sometimes they restrict the number of acquirers that can provide support to airlines. Now, that's a very airline specific example. But if you look at I suppose if we look at this in two ways, if we look at international, truly global travel businesses, they would typically do a deep integration into a relatively small number of the acquirers that I've previously mentioned, the WorldPay, the Elavons, and they would use maybe one of those providers pan-Europe. They may use the same or maybe an additional provider for North America, and maybe utilize both of those acquirers in Asia, just because that requires less technical integration work. They're only having to do two integrations. On top of that, they'd have separate integrations for some of the alternative payment methods like PayPal, etc. But it limits the work that they have to do because these integrations are costly, both in terms of the initial implementation, but also the ongoing costs of maintaining that technical integration. So understandably, travel businesses want to limit the number of partners they work with. There's also the issue of economies of scale. There's it's a bit of a myth. It can be worked around that the more volume you put through a single provider, then the lower the cost base. There are ways to work around that, but you can navigate that issue. So you'd find that the global businesses would have maybe two or four acquiring banks. More domestic travel businesses, so maybe just operating in one country or across one continent, would have the same kind of setup, but on a reduced level. So they'd maybe have one or two acquirers. They may have a legacy connection to an old acquirer that they used previously, and they may have run an RFP. And they may be using a WorldPay, a Barclaycard, or an Elavon now. So they probably have two, but predominantly they'd be using one. And what's interesting there is that the pitfalls for both really large global travel businesses or more regional travel businesses are absolutely the same. They can face the same issues. There's issues around just how much flexibility they have should issues be raised by their incumbent provider. If they all of a sudden the acquirer's risk appetite changes because there's a global pandemic, and they decide that they want to withhold settlement, then whether you're a domestic travel business or a global travel business, you face the same issue. You don't have anywhere else to go necessarily. So it's incumbent to make sure that you do have that flexibility that more than one acquirer can provide.
Yeah, that's certainly something I've heard on the grapevine. That some of the biggest, best known partners in payments are actually judging travel to be a really risky sector at the moment. And what are you hearing from people that you've been talking to, and what are the implications for travel companies?
Yeah, I think we're hearing the same thing, Pip. It's definitely on a lot of people's radars at the moment. You find that acquirers typically have very strong in certain sectors. So in the travel sector, so if you look at the airlines, first of all, you'll see WorldPay, Elavon, they're very, very strong globally in the airline sector. If you look at the wider travel sector, you've got the likes of Barclaycard and First Data. They tend to be they tend to have real sector strength, which is great because you can get a lot of advice on how best to process as a travel merchant. They can talk about recurring transactions, accounts on file, and certain ways of flagging transactions globally. So, in one hand, you get a lot of sector specific advice. On the other hand, conversely, what you find is they have a real exposure to the industry, and when an industry faces the kind of issues that COVID has introduced to the travel sector, all of a sudden they find that overexposure is an issue, and they've got to start reducing their exposure. And there's only a couple of ways that they can do that, as we know. One way is to pass that exposure back to the merchant by increasing the amount of collateral they hold, or delaying settlement so that the merchant, so the travel business, isn't receiving the funds for any bookings that are being made. That's one way they can do it. The second way is to reduce the number of merchants that they have in that sector, which means, and we're seeing this a lot at the moment. Travel merchants are being served notice, often as short as 60 days, and being told that they have to find an alternative provider, or risk being turned off. Now, again, going back to the point I made in the previous question, if you only have one acquirer in a geography that you're operating in, you may only have 60 days to find an acquirer, negotiate terms, go through the commercials, go through the contractual negotiations, and do the technical integration. It doesn't leave a lot of time, and there's a lot of people out there that are rightfully concerned about who's going to be processing their transactions come the beginning of next year.
Yeah, one more challenge to overcome. Devastated market at the moment. So is that would they be the kind of companies that might be coming to you at the moment then, because this is exactly what you can help them with, moving away perhaps from their incumbent provider and opening up some new options?
Yeah, absolutely, absolutely. It's about that flexibility, and it's a word you'll hear me use a lot over the next half an hour or so. With APEXX, you get access to 100 plus acquirers, 120, 130 alternative payment methods. Now, I'm not for one second saying that of that panel of 100 plus acquirers, every one of them will be able to service your needs or would have a desire to work with every individual travel merchant. But it certainly increases your odds of being able to find an acquirer that you're working that is willing to work with you. And we've seen the other side of the fence, which is quite interesting. We're a good sales channel for some acquiring banks. We send them business because we know that they're good at the acquirer. It's good at what they do. They're strong in a specific region or a specific sector, and we work closely to understand what the risk requirements and the risk appetite of these acquirers is at any given time. And there are acquirers out there that are looking to. I mean, to put it bluntly, they're looking to hoover up some of this travel business because they know that there's merchants out there, there's travel businesses being underserviced. That when times are good, they want to be there to support these businesses. So there are acquirers out there that want to work with travel businesses. It's a reduced number, of course, but we can provide access to that. But again, it's the flexibility of being able to just turn them on at a relatively short period with a relatively short period of notice.
Yeah. And one of the other things that the pandemic crisis has brought about as well is just rapid change in terms of destinations which are on or off, and source markets which are on or off, depending on travel restrictions and so on. Is that another reason for needing greater agility as well in terms of what you're selling and who you're selling it to at the moment?
Yeah, it certainly can be. It can be a real point of differentiation, that's for sure. I mean, we can take things back to how things used to be, certainly within the travel industry and certainly within airlines. And you can use a large global acquirer that can do everything, and they largely can. They can take transactions pretty much anywhere geographically you would want them to, within reason. But that comes at a cost, and that cost is typically a higher transaction cost, which of course, will be passed directly through to the travel business, but also in terms of the acceptance levels. So if you've got a North American acquirer trying to process domestic transactions in Asia, for instance, that's quite a crude example, but you're going to see a much lower level of acceptance than you would elsewhere. And in these times, the last thing you want to be doing is turning custom away when people are on your payment page trying to part with their cash to buy your services. You want as many of those transactions as possible to be filtering through to the bottom line.
Yeah. And even under normal business conditions, never mind, the sort of crisis situation we're in at the moment, how great a difference can it make to an airline or a hotel company or tour operator if they do expand their contracted acquirers successfully? Is there any kind of examples or case studies you can mention that sort of bring to life the difference that it can make taking this different approach?
Yeah, I mean, it's quite a big question, this one, I think. So if we look at international, the more international side of the travel business, what you find is enhancing that ecosystem and introducing more acquirers, specifically in some of the larger markets you operate in that may be outside of your core markets. You find that the acquirers have different strengths, and I alluded to that from a vertical specific standpoint, but also regionally. So you find that some of the larger domestic acquirers in specific regions can really help you kind of tailor your approach in that market to reduce friction, to process as effectively as possible, to make sure that you're driving those acceptance levels as high as possible. It's such a big thing in the industry at the moment, making sure that your acceptance levels really are as high as they can be for exactly the point I just made. You don't want to be turning people away from your payment page once they've committed to buying. So acceptance levels are really important. Again, the more domestic a provider can be, then the lower the cost base is. So you can reduce your cost per transaction, your cost per passenger significantly by going more domestic. And again, that's something that isn't easy for a travel business to do on their own because they'd have to manage all of those connections. It helps having an orchestration platform like ours. In terms of the more domestic merchants, and this is applicable across more domestic or more regional and global, it's having that redundancy. So the redundancy comes in several guises. Firstly, if for whatever reason your primary acquirer can't service your needs, maybe they have an outage, maybe there's something goes wrong, it's good to be able to flick the volume over to a contingency, so have a second provider there to be able to do that. But also redundancy in terms of if anything goes wrong, if the acquirer can no longer service your needs. We've mentioned COVID, we've mentioned people being given 60 days, but there's other reasons. Commercial terms may change. An acquirer may decide to put your price up because they're looking across their entire portfolio and they've seen margin erosion through their cost base increasing. Again, you've got very little defense against that if you can't move away. Commercial terms change all the time, contractual terms change all the time. A provider may not be meeting its service level agreement commitments to you. So again, if you've got redundancy there, you've got the carrot and the stick, of course, and this sometimes gives you the stick to be able to say to an acquirer, step up, or we are going to move our business. And then it also gives you the ability to cascade transactions. So if your primary acquirer doesn't return a successful transaction, you get a decline. What you can do is in the background reroute that transaction to other acquirers to increase the chance of that transaction being accepted. So there's a number of benefits to doing this. In terms of case studies, so we have several case studies, thankfully, and every time we launch a new corporate or enterprise level merchant, we seem to find new ways of helping, which is of course fantastic. Some of our early case studies are relatively straightforward. So we introduced a number of acquirers for a large Asian airline. They didn't realize, but they were paying very excessive FX fees. They weren't getting settled in some of the currencies that they should have been getting settled in. They were effectively paying for some of their more exotic currencies to be converted into USD, only to then incur another cost to convert them back into the original currency to be able to pay local providers to be able to pay staff in region. So the introduction of more domestic acquirers meant that they could be settled in some of the more exotic countries, and that saved tens of millions of US dollars over a 3-year period for that specific airline. We have a number of experiences, even around Europe, where we have changed acquirers for certain parts of travel businesses volume, and we've seen their acceptance levels at the low end increase by around 3%, at the higher end by around 8 or 9%. And that's just looking around Europe, around Russia, relatively close to home markets where people think a Barclaycard or a WorldPay can just service everything. The reality is different acquirers perform differently in different regions. In addition to that in addition to the acceptance levels increasing, we also see that the cost base coming down, sometimes as much as 20 or 30 basis points in some key markets like France and Spain, which obviously have a lot of travellers going both ways between the UK and there. I think the final case study is another airline. This was a UK domiciled airline that was having issues with its acquiring banks requesting more credit. This was pre-COVID. This was a number of years ago, 3 years ago. And what we did is we introduced a panel of acquirers so that they could spread the risk amongst 3 or 4 acquiring banks, working closely with the acquiring banks on a monthly basis, because the volume was so seasonal. They had different appetites at different times of the year, so we could share the volume and share the risk amongst the acquirers, which made the acquirers happy, which obviously in turn made life a lot easier for the airline.
Okay. I've had a great question from James around the average length of time it takes to switch one acquiring solution for another. But before I get you to answer that, perhaps that's a good time to introduce our first poll, just to take the temperature with our guests who are tuned in at the moment. If we can get that first poll to go live. Question to you, our audience, is would you consider changing your payment provider in the current market? Just keen to get some feedback. No, we are fully satisfied with our incumbent. No, maybe you don't have the resources or capacity at the moment. Yes, you would consider changing if the business case is clear. And D, don't know, not sure. So if you could take a moment to vote in that poll, that would be very helpful. And in the meantime, great question from James around the practicalities of changing. I mean, talk us through exactly how that works, and what is it that puts travel companies off, trying to do something different in this area? Is it time? Is it cost? Is it knowledge? Is it just being able to prioritize this kind of thing? What do you tend to experience?
Yeah, no, James, thank you for the question. It is a great one, and it plays to so many parts of what we've just been speaking about. I mean, the reality is there is no perfect path of how to integrate a new acquirer, but turning a new one on with let's use the example of if you're working with APEXX already, you have you're an acquirer that you're using through us, and you decide that you need another, and it just so happens that it's someone that we already work with, one of the 100 plus acquirers. You still have to go through the contractual and the commercial process of engaging. These are Visa, MasterCard mandates that the acquirer of record and the merchant of record must have a direct relationship. There are nuances around the payment facilitator model, but that doesn't typically work here. So that's something that needs to happen. The way we help with that, and the way that we minimize the impact to a travel business, we know your business. If you're an existing customer, we've worked with you. We know what's acceptable. We know what kind of terms you're happy with in terms of SLAs, in terms of any of the credit agreements that you would sign up to or wouldn't sign up to, and we can host a lot of the pre-negotiation on your behalf with the acquirer you've chosen or we've helped you choose, which can reduce the work significantly. We're all within APEXX. Pretty much every person, every employee and colleague that we have comes from the payment industry. So we've all worked in large acquirers. We've all represented the biggest and best acquirers out there. So we know how these guys operate. We know how to negotiate with them, and we know how to support you in negotiating with them. So we can do a lot of the work up front with your with your approval. And quite often when we get the contract across to you, it's a case of you rubber stamping it and your legal team going through just to make sure that there's nothing in there that could trip you up downstream. We help with exclusivity clauses. We get away from minimum billing and all that kind of palaver. So we really help with that. Then once you've been through the credit risk process, the underwriting process, and the contractual process, it's a case of that acquirer raising mids and us helping you with the setup. That part can take a couple of weeks, but it's typically the contractual process that takes a huge amount of time, and typically that's on the merchant side, allocating legal resource to be able to get the contract pushed through. But we help with that at every stage. In an ideal world, if you want to, if we're talking about just flipping to one of your panel of acquirers, so through the implementation process, when we've set up a travel business with APEXX, we try and make sure that you have at least two, maybe three acquirers that you contract with. You go through the process simultaneously, which obviously drives efficiencies in itself. And then if it's a case of just flipping volume over, it can be done instantly. We have to have the correct checks in place and the correct sign-off in place, just to prevent an analyst from a travel business ringing up and saying, move all our volume to a different bank. We obviously want to make sure that the sign-off process is followed. But in terms of the technical aspect of doing that, we can do that almost immediately. So it just depends on how well integrated and known you are by the acquirers. I hope that answers the question.
Thank you, Toreson. Yeah, interesting to see in the poll, very, very clear, 68% of those who voted said that they would consider changing payment provider, even in the current market, if the business case is clear enough. And I think that probably talks to what you were mentioning around the sheer business, the sheer difference it can make to your business, and it's not necessarily as complicated as some people might perceive from the outside.
Yeah, I mean, just developing on that, Pip. Sorry, just something that just came to me there. A lot of the concern is often around back end processes, around reconciliation. Certainly for the finance people that we have on the call today, they'll be thinking about the challenges associated with reconciling different providers. Again, if you choose the right payment orchestration layer, the correct platform at the front end that you connect to, they can support all of that. I mean, a payment orchestration layer should be able to take all of those reconciliation files from each of the acquirers and present them to you as the travel business in a single consolidated format, so that it doesn't matter who's processing your transactions, because the master data is coming from the orchestration layer, and that data should be sufficient to help you reconcile.
Okay. We've had a couple of questions come in which are linked to fraud, which we're going to move on to after this next point. But just wanted to talk a little bit more about, apart from expanding contracted acquirers, what else do you think travel companies should be focusing on at the moment in order to maximize checkouts and payment processes? Where do you see the greatest opportunities for travel businesses to improve in that area to make sure that they are not missing a single one of those precious sales that might come their way?
Yeah, no, I mean, removing that friction is important. It tends to be around doing the basics well. We talk about doing the basics brilliantly. That should be the start point. So what does that mean? That's going to mean different things to different people. First and foremost, it's about making sure that your acceptance levels. So we're looking at Visa and MasterCard, which in the majority of the markets, I'll caveat this, but in the majority of the markets that we operate in, we all know that cards are fairly ubiquitous. Visa, MasterCard, American Express, Diners, JCB. We tend to be, certainly in the West, very card-centric markets. So making sure that where you are taking cards and where cards are the most prolific payment method, that acceptance levels are as high as possible. So looking at the providers that can ensure that you have the highest chances of success with each of those card types. Overlaying that, it's about making sure that in each of the geographies that you operate, that you have the payment methods that people are used to using and are most comfortable with, and that can be as simple as there's some very, very good examples out there that people probably know very well. But if you take online e-commerce payments in the Netherlands, you must take Ideal, which is a real-time bank-to-bank transfer, what we would call alternative payment method. I would argue in the Netherlands, it's a primary payment method, and Visa and MasterCard are alternative. Ideal counts for somewhere in the region, and there's loads of stats out there on this, but something like 60% of all transactions taken online in the Netherlands are done so on Ideal. If you look if you go further afield and you look at the likes of, I know, the Philippines, which is a large market for some of our customers, then something like 70 or 80% of the transactions are taken through something called Dragon Pay. So it's making sure that you understand the local market that you're operating in, and you can offer the payment methods that people are used to. So that's certainly one aspect. Second is again, very simple, but making sure your payment pages are optimized for any device that the people want to be buying your products and services on. Far too often we see great websites that are beautifully designed around Chrome or Safari or any of the older Edge or Firefox browsers. A lot of detail has gone into that. But then they aren't necessarily optimized for older mobile phones. We saw an issue quite recently where a payment page looked terrible on an iPhone 6. Now, I think we just had the iPhone 12 released or whatever it was, but there are still people buying things on iPhone 6s. So it's making sure that you understand what devices your customers are using, and that the things are optimized. And again, outsourcing that if it's not something you want to do. Far too often we see, it's not just travel businesses, but retailers taking a lot of the payment responsibility internally, when our view and the view of a lot of our customers, thankfully, is that this should be outsourced to a payments company. Travel merchants want to put people on holiday, they want to put bums on flights. They shouldn't have to be worrying about this level of detail when it comes to optimizing their payment page. Simple things like autofill forms, reducing the number of data entry points that customers have to make. I'm a huge fan of Apple Pay, because I know when I'm buying something, it's everything's stored on my phone. The billing address and the delivery address is auto-populated off the back of the Apple Pay integration. Now, there are more constraints for travel customers. The data entry, the level 3 data that's required doesn't make it that easy, but actually means it should be focused on more, because there's so many additional entries that are required. Again, cascading transactions. So having more than one acquirer to make sure that you can optimize that acceptance level. We can go on and on and on, but it's about doing the basics really, really well, and engaging a payment company that doesn't want to just sell you their words. It's not like an acquirer. They will help you to some degree, but you need somebody independent that can look at this from your side of things and help you find the best partners to work with.
Yeah. I'm going to touch upon fraud side next, but just a quick question from Giles Custerson, who says, volume is often the key driver on acquiring costs. How does a panel of acquirers impact price, given each acquirer will only take a smaller proportion of your total card acquiring?
Yeah, it's something that we faced a lot, Giles, in the early days. This whole thing around economies of scale and acquirers giving you tiered pricing. It's no surprise that it's something that they've created themselves just to drive more revenue for themselves. Obviously, it's like anything; they incentivize you to use their business to put as much business through them as possible. When you start looking at a panel, we can look at this through a different lens. So if you, as a business, are taking the volume that you have, and let's just say you've got 50 million of card processing volume, just to use arbitrary figures, then that's all that you have to negotiate with. And if you're looking to kind of bifurcate that and use 2 acquirers, then obviously, depending on how much you put, it reduces your negotiating power. When you come to an acquirer, when you use an acquirer agnostic platform like ours, you're obviously not the only one using it, and it's not only your volume that we can use as leverage. So in the travel industry, as we know, there's there's less acquiring appetite. So there's a smaller number of acquirers that we can use. So what we're doing, we're in the process of doing this with a number of merchants. We're effectively coupling the volume behind the scenes to be able to, one, offset some of the risk. So with some of our acquirers, we say, look, take this airline volume, for instance, or this higher risk volume, or volume that is perceived to be high risk, and we'll offset it with some retail volume, which is immediate fulfillment. They're booming, and there's ways to leverage that commercially, and quite simply just bucketing volume together and going out to three acquirers and saying we have three merchants all with 50 million each. It quite often enables us to move away from that tiered pricing conversation. And in line with that, it removes the exclusivity discussion, which should never exist. You shouldn't be tied into one acquirer, but also the minimum volumes, which is practically the same as an exclusivity at times if the minimum volumes are sufficiently high. So there are ways around it, Giles, but it's certainly something we're conscious of for sure.
Yeah. We'll touch quickly upon fraud. We've had a question about it, and I also wanted to ask a poll question. If we can that next poll question live to our audience, how would you describe your business's preparedness to tackle online payment fraud? Do you believe you're in an excellent position? Maybe you've taken all appropriate advice and measures and thoroughly tested your systems. An average position, maybe you believe you've still got some vulnerabilities, or poor, are you way behind? So take a second to vote in that if you can. And the specific question here was from Jamie. He asked, from a fraud prevention perspective, what difference does working with multiple acquirers make? Does that offer more protection, or are you more vulnerable in terms of fraud and money laundering and so on?
Yeah, interesting. So again, there's multiple facets to this. I think one of the benefits of working with more, not necessarily more acquirers, but I suppose by default you do end up working with more. If you're looking at more localized acquirers, they tend to know their local markets better, and they can often advise on some of the kind of more standard ways of flagging transactions, or using ABS checking, or how you might implement 3D Secure specific to their region. But I would say, by and large, having more acquirers doesn't reduce your level of fraud risk, or indeed increase it. I think it's about putting the right checks and balances in place internally, and also making sure that you're working with I say a really good fraud platform, and by that I mean a fraud platform that works for your sector, works for your business, and understands how you operate, and takes the time to get into the nuts and bolts of how you operate. And there's some great fraud platforms out there. My colleagues and I all agree on this. We tend to favour the fraud-specific platforms, and what I mean there is the likes of Decision Manager, Count, Certify, the Ravelin, etc. The guys that just do fraud. That's their expertise, and we tend to steer away from the acquirer bolt-on solutions. So I know some acquirers have produced their own fraud tools, and I'm not saying they're bad per se, but all the data I've seen suggests that actually working with an independent fraud provider typically yields better results, both in terms of fraud checking, so stopping fraud. You can't stop fraudulent transactions, but minimizing fraudulent transactions, maximizing the amount of transaction flow going through, which is obviously the other side of the same coin, but also from an SLA perspective and from a working relationship perspective, they tend to do a little bit better in my view. So I don't think it really has too much of an impact.
Mm-hmm. Okay. Interesting that 81% of people who voted in the poll said they would classify their preparedness to tackle online payment fraud as average. They still have some vulnerabilities. Would you say that's your experience talking to clients, that there's still some way to go for certain travel companies to be more
Yeah,
in this area?
I think that's across the board. I think that's quite a healthy standpoint to take. I think we should all have healthy levels of skepticism about our current processes, our current checks and balances on how we deal with these things. I think we would all probably agree that the fraudsters tend to be ahead of the curve, and we are continually playing catch up. So if people start getting, if businesses start getting not blasé, but think that they've nailed it, I think they're probably opening themselves up for a fall. I think it's good to have focus on this and continue to look at how things are progressing and evolving. Definitely.
Yeah, again, subject for a whole separate seminar. Probably. Before we
Absolutely.
move on, just wanted to mention a question from Sudhir, who was asking, are you aware of the significant protection provided by trust accounts? So as well as regulatory support, talking about trusts protecting the acquirer better than holding funds back or cash-backed insurance bonds. Um,
Yes. So I mean, this again, just to, as Pip just said, that's a whole different webinar that we can go into, and I've purposely kept this at a very high level, where just talking about very basic acquirer risk and some of the very basic methods that they put in place. But absolutely, there are some really interesting almost insurance programs out there that can reduce the acquirer's risk and can certainly help the travel industry by moving some of that risk away from the acquirer. But yeah, absolutely, there's a lot more to this than just the basics that I've discussed today.
Okay. We are, yeah, time is ticking on. So certainly wanted to move on to another area which I know is very topical at the moment, and something that travel companies will be hopefully getting their heads round, and that's the final part of the Payment Services Directive 2. Can you tell us a little bit about the changes that are taking place around customer authentication and exactly what travel companies need to be thinking about and the deadlines that are involved?
Yeah, so I mean, this should be on everybody's radar, and I'm sure it is. So I suppose the overview of it is that SCA simply requires customers that are paying for goods and services online to authenticate with two different factors, just keeping it simple as we can, and that's obviously before the transaction can be authorized. So we talk about one-time passwords that have been sent to mobile phones, biometrics on phone, fingerprint scanned, etc., etc. But the deadlines are coming very soon. So I mean, the off the top of my head, the end of this year, so December 31st, the EEA have to enact SCA. For the UK specific, I think it's September 21. But these have already been postponed a couple of times. I think the original date was September 19. But the European Banking Authority has said there's going to be no further delays, which may take a lot of people by surprise. And anecdotally, a lot of people I speak to aren't necessarily ready. There's certainly been a bit of a scramble over the last couple of months to make sure that businesses are ready. But for the people on the call that are worried about this, just make sure you're engaged with your acquirer. They should be supporting you on this. And if they're providing your gateway, if it's their gateway that you're using to connect to their acquiring platform, then they should have been communicating with you in plenty of time to make sure that all of these, again, checks and balances are in place, and the support that you require is there, ready for the significant dates. If they're not, you need to start asking questions and making sure that they're feeding back to you why they're not, why these changes haven't been made, and maybe looking at support from elsewhere.
And is it something that is going to be at travel companies' cost? Is investment required or not necessarily?
It depends how they're set up, but yes, quite possibly. I mean, again, it goes back to a point I made earlier. A lot of this should be outsourced. The cost incurred here should be borne by companies like APEXX and by the acquirers. We're the ones that operate in the payment space, and we should be providing this as a service. Of course, when we're incurring costs, they will be passed on, but because we're doing it at such a larger scale, those costs will be drastically reduced, and all merchants, not just the travel sector, but all merchants will benefit. Now, that said, there's always going to be some development costs internally, understanding the process. So it's never going to be, those costs are never going to disappear entirely. But yeah, outsourcing this as much as possible will certainly minimize the cost.
Okay. Um, we time is ticking on, and we had another question come through from one of our guests. So I wanted to make sure I took time to look at that one from Aaron. A question around a method of payment, if I may. We did a recent survey to our customers. They suggested they prefer flexible ways to pay, most commonly via direct debit for their balances after deposit. What are your thoughts on direct debit being a safe and suitable method during these COVID times? As a travel agency, we want to give our customers choice, easy ways to pay, but do we have any risks to consider in utilising such method?
Yes, and so the installments are an interesting one, and we talk about this a lot internally. How we've gone back. I mean, we used to pay in installments with catalogs years ago, right? So it's interesting to see this come full circle. And there's a couple of ways that it can be utilized. So, firstly, is direct debit, which is a much older and maybe more trusted way of doing it. It's also quite a cheap way of doing installment payments. You also have the buy now, pay later solutions, the likes of Klarna, Afterpay, ClearPay, Laybuy, and the like, who are less prevalent in the travel business, and they've kind of cut their teeth in the retail sectors. But I know they do have appetite to work in travel. With direct debit specifically, you face there's a few obvious issues. I mean, firstly, is somebody just cancelling the direct debit after the deposit's been paid or before after the mandate has been completed, but before the first payment is being taken. You then have the costs associated to chasing that up and managing and monitoring. And obviously, you don't want to be raising a request for funds if that mandate has been cancelled by the customer. So there are some logistics involved, certainly some operational considerations. But I know a number of companies, certainly across the UK, and it is unless you're going into SEPA DD, which is kind of a pan-European solution, but very prevalent and very well used in Germany. It does have its limitations, but it has been used to good effect. I know one merchant that we're close to has used it for a few years now, and they saw a significant uptick in sales through that channel, and they credit direct debit as being a success. So it absolutely can be used, but you must understand the limitations that it brings.
Yeah, I hope that answered your question, Aaron. We ought to wrap up really, Toreson. I had some more questions I wanted to ask you, but it's yeah almost 10 to now. I mean, just final thoughts really on your vision for what you hope the next few years might bring in the online payments arena. I know you set up APEXX Global with a clear idea of what wasn't right and what wasn't working properly in this area. How much progress do you think is being made towards changing that, and how much is still left to be done?
Yeah, I find it fascinating. I mean, the sole reason Apex was established 4.5 years ago is because we were all working in large acquirers, and we could see that merchants were being underserviced, and not just travel merchants. I think travel merchants do get the brunt of it, and not just recently because of COVID, but merchants were being underserviced and quite often overcharged. And the acquirers took the customers for granted because these deep integrations that the merchants were having to do meant that they had very little flexibility, and they had very little choice if an acquirer wasn't performing. Thankfully, we've seen a significant change over probably only the last 18 months to 2 years, which is not long at all, certainly not when we're talking about payments. But merchants are demanding more. They're expecting greater levels of flexibility, greater levels of service from their providers. And they're starting to understand that actually an element of this can be outsourced, and that outsourcing reduces cost and increases flexibility. So it's a bit of a silver bullet. I think that will continue. Yeah, I think we've got some interesting times ahead.
Great. Thank you. Well, thanks everybody who tuned in live, or if you're watching this later on demand. It was great to have you with us. Thanks very much to you, Toreson, as well, for sharing some of your insight. If you would like to meet Toreson or Sam from the marketing team at APEXX, do go back out into the virtual lobby. They'll be there in the sponsor booth, so you can click on that and you can connect there and also watch a video as well, I believe. So do feel free to use the virtual lobby also to network with anybody else that's in the event. If you scroll down towards the bottom in the virtual lobby, you'll see who's still live. You can actually click on other people and have a video chat if you see a contact or a peer that you'd like to say hello to. So thanks again for joining us. Thanks, Toreson, for sharing your insight and thoughts and hopes for the future. And guests, I hope you found it an interesting and thought-provoking session. So take care, everybody, and see you again soon.
Thanks, Pippa.